Let's look more now then at the economic implications for this then. Charles Pellegrin is here. Charles, what's the market reaction been, first of all?
Well, let's start looking at currencies. In the short term, the fall of Michel Barnier's government was widely expected once it became clear that the National Rally was going to follow through on its threat to vote that it didn't have confidence in the government earlier this week. So that risk had been priced in, and the euro has been slightly strengthening on the day, hovering around 1.053 to the dollar. But if you take a step back, the euro has weakened by around 2.7% since President Emmanuel Macron called the snap elections last June, the event that really started this cascade of political turmoil, as you can see from the graph showing you how the euro's value shifted against the dollar over the past 6 months. It's also important to note that the dollar gained in strength on the back of Trump's electoral victory in the U.S. and his policy of import tariffs, which has increased demand for U.S. dollars.
So that weakening in the euro there then, Charles, what does that actually mean?
Broadly, it signifies that international investors are concerned about the health of the European and specifically French economy. And one aspect in particular stands out: its ability to honor its debts in due time. The French state borrows money by issuing bonds, and the people who buy these bonds are guaranteed a return or yield. The political uncertainty we've seen has driven those yields up, underlining that it's seen as a riskier bet that the French government will actually be able to pay its bondholders. The yield on the French 10-year bond is actually going slightly lower this Thursday, but the larger picture shows those levels of borrowing were last reached in 2012, 2013, around the time of the euro sovereign debt crisis, as mentioned by Dave Keating. France is currently borrowing at the same levels today as the Greek government. So France will have to pay more to finance its debt, with wide-reaching consequences. Take a listen.
So that already is a problem for the state, because that means that it will have to spend more money, more resource on servicing its debt, paying the interest on its debt, rather than financing public services. And the other problem is that the interest rates on public debt, which are a really central rate in financial and economic terms, could increase, or at least decrease at a slower rate. This can have a knock-on impact on other actors, banks, and borrowing rates for households and businesses.
So a key factor then in assessing creditworthiness is the health of a government's public finances. What does the ouster of the Barnier government mean in that regard, Charles?
Well, Barnier had vowed to tackle the French state's growing public deficit and bring it back to healthier levels. This means making sure that the French state doesn't end up spending too much more than it brings in revenue. His initial plans for the 2025 budget had promised to generate 60 billion euros in savings by increasing taxes and cutting spending. That was supposed to bring the deficit to 5% of GDP by the end of next year. Since the pandemic in 2020, that public deficit has really ballooned much higher than the European target, which is of 3% of GDP. And this year, it's actually expected to reach a 6.1%. Credit ratings agencies like Moody's see the toppling of Barnier's government reducing the probability that public finances would actually be put in order once again, as they said in a note this Thursday. This thereby reduces faith in France's ability to honor its debts. Now, investors will be awaiting the new government's plans for the 2025 budget and what it could mean for the deficit.
Finally from Charles, quick look at the stock markets then.
That's right. Let's have a look at how those major European bourses are opening this Thursday, with especially a quick look at the Paris CAC 40. The top index of top French companies is currently opening lower, down 0.2%, signifying, again, that concern over the political environment in France.
Charles, thanks so much. Charles Pellegrin delving, of course, into all the economic implications or ramifications of the situation here in France at the moment.